When I saw the Forex chart for the first time, I had no idea what these bar-like color structures are. I was watching a video and the guy was referring to it as candlesticks. I didn't know what candlesticks were and I couldn't even understand a single thing he said. Understanding candlesticks is the first step you need to take toward your journey of technical analysis. And this video is all about it. Hi guys, welcome to Forex Monopoly. My name is Daksh and today we are going to talk about candlesticks. Before we move forward, a like and a sub will be great. So, what are candlesticks? Candlesticks are basic price bars that represent the movement of the price of a currency. The candlesticks allow the trader to know at what price the currency opens during the trading session and at what price did it close at the end of the trading session. It also provides information regarding how high and how low the price moved during a trading session. The candlesticks consist of two important things, the body and the wick. The body tells us about the opening and the closing price of the candle. Like here in this example, you can see the candle started from here, that is 1776.881 and ended at 1815.137. You can also directly see the opening and the closing price of the candle without having to point the cursor at the end and the start of the body. For that, just hold the cursor on the candle whose open and close you want to see. Now to the top, you have your OHLC section, which means open, high, low and close. Here you can directly view all the information that the candle provides. That is the opening price, the high, the low and the closing price of the candle. So the solid body tells us about the opening and the closing price of the candle. Now the other part of the candlesticks is the wicks, or some people even call it shadow. Wick is the thin line over the body of the candle and it tells us about the highest and the lowest price the candle moves to before it completes. And what I mean is, like here in this example, the lowest price which the candle moved to is 1775.897 and the highest price is 1817.362. That means before the candle was formed, it first moved to 1775.897 and it also moved to 1817.362. Now you may be wondering, why are there different colors to my candlesticks? Well, because there are two different types of candlesticks, the bullish candlestick and the bearish candlesticks. In my chart, the white candles are the bullish candlesticks and the black colored candles are the bearish candlesticks. And basically a bullish candle represents that the price is moving up or the buyers dominated that particular trading session. And the bearish candlestick represents that the price is moving down and the sellers dominated that particular trading session. Now, as there are different time frames, a candle on the 4-hour chart will take 4 hours to complete and a candle on the daily chart will take around 1 day to complete. Like if we move to the weekly chart here, one candle will take 1 week to complete, and if we move to the daily chart here, one candle will take 1 day to complete. Now the candlesticks not only tells us about the price movement, but if we look closely and pay attention, it also gives us a lot of important information. Like the size of the body tells us something. A bullish candlestick with a small body indicates that buyers were in control at that time period, but just by a margin. Whereas a bullish candlestick with a long body indicates that the buyers were in total control and the control was just by a margin. They had a good influence over the sellers, which also means that the buyers dominated the market. Like if we see a long bullish candle on a weekly time frame, it indicates that the buyers dominated the market during the week. Like over here, if you look at this weekly candle, this candle is long and tells us that during a week, buyers dominated the market. The other thing is the length of the wicks. Wicks on candlesticks are caused when the price of the currency moves in a certain direction but does not sustain that price level and moves back away from it. Like here in this example, the price was moving down and sellers were in control, but then it reached this level and then buyers took back the control and a bullish body with long wicks was formed. So candlestick with long wicks on either side indicate that at some point in time, one group of the market participant, that is buyers or the sellers, were in good control, but then the other group quickly caused the price to reverse. Traders often look for such candlestick patterns on the price charts to identify major price levels, and they also get into a trade based on the pattern the candlestick have created, and this is also called as candlestick pattern trading. I will be adding a video on this topic very soon, so stay tuned and make sure you subscribe to this channel so that you don't miss out on it. Thank you so much for watching.